Hey guys, welcome back to Berg. So CoinGecko just dropped in 2025 Bitcoin report. Yeah guys, a 90-page deep dive into how Bitcoin exchange and trader evolved after a few crazy years. Yes guys, but that is not just about price chart. It's still a deep story about how institution self custody and liquidity are reshape the entire market. So in this video, I'm going to break it down the key inside what's real driving Bitcoins. So in this video, I'm going to break it down the key inside what's really driving Bitcoins institution era and what the data reveal about where we're hiding next. So guys, before we start, you can just hit like and subscribe and let's go.
Let's set the stage. CoinGecko compared Bitcoin's 2024 performance to the S&P 500, Nasdaq, gold, and the dollar index. And the result? Bitcoin outperformed almost every major asset last year. But what really caught my eye was the correlation drop in late 2024. Bitcoin started moving independently from equities. That's a big deal. It means BTC is maturing, behaving less like a speculative tech stock and more like a macro hedge, similar to digital gold. It's proof that Bitcoin's no longer just riding market hype, it's standing on its own fundamentals. Next up, institutions. CoinGecko reveals that public companies and governments now hold over 1 million BTC, roughly 5% of total supply. Think about that. MicroStrategy, with its crazy accumulation strategy, Tesla, Block Square, and even governments like Germany and the US. When entities like that hold Bitcoin, it's not for quick trades, it's for balance sheet strength. This means two things: sell and loss, liquid supply on the market. Condé sell and loss, long-term stability and credibility. So yeah, Bitcoin is transforming from a retail-driven asset to an institutional-grade reserve, and that's massive for long-term adoption. Now, let's talk about trust, or should I say the lack of it, after the FTX. CoinGecko's data shows that since 2023, exchange reserves keep dropping. People are withdrawing their coins and moving to cold wallets, hardware wallets, and on-chain verification tools. But listen, this isn't just fear, it's evolution. In traditional finance, trust means delegation. You give your money to someone else to manage. In crypto, trust means verification. The mindset shifted from not your keys, not your coins being a slogan to being the standard, and that's a healthy direction for the entire ecosystem. So where's all the trading activity happening today? According to CoinGecko, the top 11 global exchanges by trading volume and open interest include Binance OKX, Bybit, Bitgate, Gate, IO, and WX, just to name a few. But here's what's interesting. It's not just who's on top, it's how they're competing. CoinGecko makes it clear. The real game changer is liquidity quality, not just raw volume. That means things like execution speed, order book depth, low slippage. These are what define a true professional exchange today. We've officially entered the efficiency era, where traders care about performance, not marketing. Here's another big takeaway. Spot trading has plateaued, but derivatives are exploding. Open interest is surging across exchanges. Some platforms now have over $18 billion locked in open positions. That tells us something. Retail hype may have cooled, but professional traders and funds are extremely active, hedging, arbitraging, and optimizing capital. So instead of a gambling market, Bitcoin's turning into a structured financial ecosystem. The focus now is risk management, not random pumps. And honestly, that's what long-term maturity looks like. And that brings us to the final part, the big picture. Volatility keeps shrinking. Order books are deeper, spreads are tighter. Bitcoin can now absorb huge trading volume without wild swings. That's structural stabilization. So what's next in 2025? ETF inflows keep growing, derivatives markets are expanding, and liquidity. How deep, how stable, and who controls it will define the winners. The CoinGecko report doesn't try to predict price. It explains why the structure matters. Because the next bull run won't just be about excitement. It'll be about execution and trust. So yeah, the institutional era is officially here. If you found this breakdown helpful, don't forget to drop a like, subscribe, and tell me in the comments. Do you think institutions make Bitcoin stronger or too centralized? Thanks for watching. This is Berg, and I'll see you in the next one.